Hello everybody, I hope that you're good. We're gonna talk about the weeks, okay? Because yesterday, if you watched yesterday's video, we marked these 2 weeks. We had this week at 28,250, and then from last week, we still have this target of 27,235 and 27,550 with the 50% of this week, okay? You can see the price almost went to this week, but it didn't feel it. Why? Because we had the daily 50 MA there. Check this out. Okay, check the accuracy. That's exactly, if we, make a line, 27,666, exactly the 50 EMA. You can check in the top left of the screen, 27,682 is the daily 50 EMA. So in essence, that was the target, okay? Now, if we go again to the 1 hour time frame, we're going to go through yesterday's price action. And then I think that we're probably going to come to the conclusion that they might leave this week for tomorrow, okay? Because tomorrow, Wednesday, we have the FOMC meeting. There is going to be a lot of volatility. You're going to see spikes up and down, okay? So it's very likely that you see something crazy like, for example, this, okay? You might see literally something like this. Tomorrow is going to be very hectic, so you have to keep in mind that if you trade tomorrow, don't trade until probably, I would say, after the press conference, okay? So I usually, when there is FOMC, I don't like to trade 30 minutes before the FOMC meeting, before the data comes out, and 45 minutes after the press conference, okay? So that's my suggestion. That's what I usually do. But of course, it's not financial advice. You guys can do what you want. You can gamble if you want, but I'm not willing to risk my money, okay? Now, let's go through yesterday's price action, because we had this week, okay? And we were talking that if we saw, this week getting filled or even a sweep of the lows, that for example we saw here, and price didn't leave an imbalance, then I would enter up a long position. And I didn't, because if you go to the 15 minutes time frame, I was talking with the guys in Telegram about this, you can see that I left this long wick. Okay, so I didn't enter in this bounce because I was thinking that price was going to come back to this zone, and you can see that I did. Then we have the same thing going on here, another long wick. Okay, in this one, we were expecting the same, that price comes back down to the wick. So until here, there is no moment to enter along. Then in this zone, okay, I like this better because you can see that it doesn't leave a wick behind. And if you go to the 1 hour time frame, you can see that this is a bullish engulfing candle, and I entered 934. So that was around here when I entered, okay? So right now I'm in a long position, with very tight stop loss. I don't have big confidence of this in this trade, okay? But that was the idea. Now, what I'm expecting to see today is, if you notice in this zone, we have a resistance, okay? We've got rejected so many times. So what I would like to see is something like this, okay? If it's something like this, then I'm going to target the 50 EMA in the 1 hour time frame, that right now it's at 28,435. So that's what I'm looking at today. If I see something like this, and then a deviation, then at this moment I'm going to close my long. Why should I wait for it to hit my entry point again? No point, because if I see something like this, I know it's going to come back to the range, and probably it's going to form a range like this, okay, until tomorrow. So that's what I'm waiting for. Yesterday we had a massive drop. I think it was like a 4 or 5%. It was quite vile. Let me check. So this was around here. That's a 5% drop. So at least today I would like to see some kind of a bounce, maybe to test the 1 hour 50 EMA. But again, if I don't see that, and I see something like this, then at this moment, I'm going to get out my long, okay? And we're going to target this zone, maybe some range, and tomorrow we're going to see maybe some crazy volatility, and maybe they can fill the 50% of the week at least. Okay, so that's what I have in mind at the moment. Let's have a quick look at the dollar index. Let's see how it's doing. Daily time frame. Okay, it hasn't lost its lows yet, so I would say that for now, the dollar index is safe, okay? Remember that we were talking that this might be forming a W pattern, okay? You can see something like this maybe playing out, or this could be, push low, retrace, continuation. So that's the question right now. Is the dollar index forming a W pattern or a retrace before continuation? Because you know that Bitcoin trades against the dollar. So if the dollar happens to be forming a W pattern, and we are now seeing this leg up, then when the dollar index goes up, Bitcoin goes down, okay? And this is quite a big distance, to be honest. This is around, let me check, almost 4%. So that would be, well, without the almost, because it would have to go above this high. So it would be at least 5%, I would say. And that would mean a big drop for Bitcoin, okay? So keep this in mind. Let's see what the dollar index is doing. In my opinion, as long as the dollar index doesn't lose this low, then I'm gonna be favoring a W pattern. Now, if we see the dollar index starting to lose this low, of course, yes, we're gonna expect lower prices, probably 96. I would say between 96 and 95 would be a normal direction. You're gonna be able to see very clearly here the inverse correlation between the dollar index and Bitcoin, okay? So if you check, the orange line is Bitcoin, and what we have in the chart is the dollar index, okay? So you can see the dollar index makes a top, okay? That's the 8th of March, and you can see that Bitcoin, the 10th of March, makes a bottom. And that's when we start to see this crazy run for Bitcoin from 20K all the way to 30K. At the same time that dollar index went from 105 to 100, okay? So you can see the correlation there. Now, the dollar index, it seems like it might be forming a W formation. It's found, for now, a bottom, okay? And you can see that Bitcoin is starting to retrace, okay? So if we continue to see the dollar index going high, then Bitcoin is gonna go low, okay? So that's what you have to pay attention to. However, if we see the opposite and we see the dollar index continue falling, then Bitcoin is gonna have another run up, okay? This is why, in my opinion, it's very important to always keep an eye on the dollar index, because sometimes it can help you to anticipate the next move for Bitcoin. This is the best example, in my opinion. You can see very clearly that the dollar index is forming a clear top here. You can see this candle, the doji candle, and then a bearish engulfing candle. That happens the 9th of March, and Bitcoin starts to go up the 10th of March. So here you would know that the next day, the most likely thing is that the dollar index goes down and Bitcoin goes up. Let's have a look at the S&P, because the S&P is doing some interesting moves in this zone. Okay, so let's go there, here. Okay, let's go to the smaller time frame, but lower time frame. Okay, so you can see that we were in this range for quite some time, 24 days. That's more than 3 weeks, okay? And now finally see that it has breaking out of this range. The question now is, are you gonna see something similar to what we saw in between the 13th of April and the 20th of April? Okay, that was a deviation. Or what we saw in the 26th and 27th of April, another deviation. Because what the S&P has to do here is, retest this zone and then go higher. And then we would target 4,200, okay? Because that's a round number. It's a psychological number. It's a psychological zone where we could see rejections, okay? And some kind of sideways move in this zone. So that's what I'm keeping a look at now. Because if we see the S&P coming lower and it fails to test this zone as support, then we're going to go back in this range. Is that clear? Now, this week is going to be wild for the S&P, don't get me wrong, because we have tomorrow on Wednesday the FOMC meeting. On Thursday, we have Apple's earnings, and on Friday, we have the non-farm payrolls, okay? So it's going to be a very volatile week for the S&P. So if we can hold this zone, that's great, because we're going to be targeting 4,200, but if it loses this zone and goes back into the range, then Bitcoin might have an excuse to continue going down, okay? So that's the important thing about the S&P and Bitcoin, that correlation that they seem to have. The FOMC meeting tomorrow is going to be a very interesting one, because 25 basis points is priced in, 85% of the market is expecting 25 basis points. So that's priced in, that's not a problem. I think the thing that's going to be volatile tomorrow is going to be the press conference. Let's see what Jerome Powell has to say. But seeing that the futures markets, they are pricing 25 basis points cuts this year. So basically 3 rate cuts of 25 basis points. I think that the most likely thing is that Jerome Powell comes tomorrow and says in the press conference, again, that there is not going to be rate cuts this year. So let's see how the S&P takes that. Okay, that's what I'm anticipating for tomorrow's press conference. It's not going to be a surprise 25 basis points highs. Nobody's going to be surprised. The market is not going to be surprised about that. They're going to be surprised about the press conference. If you go to high block capital in the 3 months time frame, so we have the bigger picture of where the liquidity is in higher time frame. We can see that there is liquidity pretty much in both sides. Okay, we have liquidity to the downside. We have loads at 22,400 and 600. Also at 25,400 and 600. This is this was a major resistance in the past that it hasn't been tested as support yet. So that's an interesting zone. Obviously, if we lose 27,000, we're going to be aiming at 25,600, okay? That's the reality. But there is also a lot of liquidity to the upside. Look at this, 31,200 and 33,400. So we can't dismiss the possibility that Bitcoin could be going higher. Okay, of course, it also depends on the dollar index, in my opinion. Let's see how the double bottom develops. Now, in the 1 month time frame, we have pretty much the same story. Lots of liquidity at 26,400, but also to the upside, all the way to 33k. There is loads of liquidity, especially between 31,300 and 30,300. So that's basically between these highs that we had for some time. How many days? That was for 4 days, and also right above the previous highs, because always above previous highs and below previous lows, there is always quite a lot of liquidity. And in the 7 days time frame, let's see what we got here. I see quite a lot of liquidity to the upside at 30,300. Okay, that's why on the Sunday update we were projecting first that maybe they could take this zone, but they didn't. They just went all the way low. Okay, so now we are very close to 27,000, right below the wick. Maybe that could be a sweep of the lows, or it just must be continuing going lower, because there is also quite a lot of liquidity at 26,450. So you can see that the liquidation heat maps at the moment is not very clear. You know, let's check the 6 months time frame, because I don't think we've checked this one. I mean, yes, the liquidity, the major liquidity is to the downside. 25,500, 22,500, the 18,000s, also a lot of liquidity, and below the previous lows, because always below the previous lows there is a lot of liquidity, and that's at 13,500. Now I'm not saying we're gonna go here because we are at 28,000 at the moment, okay? But keep in mind that there is a lot of liquidity to the downside, and I don't know how the last quarter of the year is gonna play out. I posted the 31st of December that we were expecting the first quarter of the year a bear rally, then a pivot in the second quarter of the year. We just started the second quarter of the year. Let's see if the Fed can pivot, but they're gonna probably say tomorrow that they're not gonna that we're not gonna see any rate cuts this year. And then if they do that pivot in the second quarter of the year, I said that if that happens, you know, looking at what happens historically after the Fed pivots, we could see a recession and a big dump for the S&P at the end of the year. Of course, you know, it's difficult to tell because I don't know what the Fed is thinking. I don't know if, you know, they're going to bluff tomorrow and say they're not going to do rate cuts and then they're going to end up doing them. Or they are not going to. So let's see how that develops. But if we see, you know, the second quarter of the year a pivot, I probably go with the narrative that we're going to have a bearish end of the year. I don't know if we're going to go all the way to the lows. It seems pretty far at the moment. We are, you know, that was 15k. We're around almost at 30k. It's a long distance. So again, guys, level by level, if we lose 27k, then we're going to aim for 25,400-ish, where it was the previous resistance. And if we lose that, of course we're going to look at these liquidations at 22,500 and so on. So guys, thank you so much for watching, and I'll see you soon.